3 out of the 4 largest bank failures in U.S. history happened in the past 6 weeks. We're going to be talking about what happened and then what really happened. I'm Julie Hartman, and this is Timeless. Hey everyone, welcome to Timeless, the show where I talk about timeless, eternal subjects. I hope that you all are having a great week. Now, you probably just heard what I said, the show where I talk about timeless, eternal subjects. And then you also heard the introduction where I'm talking about the bank collapses, and you're probably thinking, isn't that timely stuff? Well, my answer to that is that my show is primarily about worldview. What I really want to do is talk about issues through the lens of having timeless, eternal principles. Because whatever goes on in our day-to-day lives, they can be plugged in to those timeless, eternal principles, and those principles can guide us. And one, of course, of the biggest news stories that is happening right now that we really need to make sense of are these bank collapses. As you heard in the first few seconds of the show, 3 out of the 4 largest bank failures in the entirety of U.S. history have happened in just the past 6 weeks. Washington Mutual is the #1 biggest bank failure in the United States. That happened back in the 2008-2009 financial crisis, and that had $188 billion in deposits. So that's number 1. Number 2 is the Silicon Valley Bank, which happened just a few weeks ago. That had $175 billion in deposits. Number 3 is the First Republic Bank, which had $103 billion in deposits. And then number 4 is the Signature Bank, which had $88 billion in deposits. So these are just examples of how we are hurling towards economic collapse here in the United States. It is undeniable that we are going to have a recession very soon. Of course, these bank failures are one source of evidence, but also there are all these reports about how Americans are defaulting on their car payments at the highest rate since 2009. Obviously, inflation is at an all-time decade high, as are interest rates. So as I said earlier, I want to talk about what is happening, in other words, the facts, and then go to what's really happening. And I'm going to make the argument that a lot of the cultural problems that plague us have sort of seeped into this realm of economics and are explaining what is going on here. But first, I just want to tell you, though I'm about to explain using some technical economics-y terms what has happened, I'm going to try to at least explain it in a very simple, understandable way. A little note about your host: I am not good when it comes to economics. I've really had to stay on it and learn it. It can be complicated, but we all really do need to understand it. So I'm going to make it as simple and understandable as possible. So what has caused these 3 banks to collapse within the past 6 weeks? Mainly inflation. Inflation, as I said, has hit an all-decade high. Interest rates, which are set by the Fed, which are used to combat or cool inflation, are also at a decade high. So what has caused inflation? Well, the stimulus checks that the U.S. government handed out during the lockdowns are a big contributor. Essentially, we were paying people to be unemployed. That's one of the biggest contributors. But also, really, it's been the reckless, indiscriminate spending that has been pursued under the Biden administration in recent months and over the past 2 years. A prime example of that is the Inflation Reduction Act, which has done nothing to reduce inflation and has in fact only contributed to inflation. Actually, the act itself has nothing to do with inflation. It's basically a Green New Deal Act where the government is handing out subsidies for solar panel companies and for people to pursue green energy alternatives in their lives. But again, that's just pumping money like the COVID stimulus checks into the market, and that is just not an efficient way to run a market by just handing out money to people so that there's all this extra money sloshing around, which bids up prices in turn. Another example, I said reckless spending. You know what was included in one of our most recent spending packages in Congress? Your taxpayer money is going to go towards an LGBTQ museum here in the United States, and also towards a Michelle Obama walkway in Atlanta, Georgia. Talk about reckless, superfluous spending. Also, the Biden administration has made it very difficult for small businesses to open because of intense government regulation. And of course, one of the biggest contributors of inflation has been the environmental policies pursued by this administration, namely that President Biden has shut down certain drilling facilities here in the United States. Under the previous administration, we were oil independent. We had drilling facilities off the shores in California, in Texas. Actually, the United States, we have very rich oil reserves. We think of the Middle East as sort of having all of them, but we have them here in the United States. But thanks to the wokesters who say that it is horrible and oppressive and somehow racist to drill, President Biden and his administration has shut down a lot of these facilities and has instead entreated to our adversaries to get oil. Now, what does this have to do with inflation? Inflation is heavily affected by oil. Oil affects so much of our prices. Oil, i.e. gas, and food are the two main contributors. So when you are cutting off a huge sector of our economy, that is drilling, and instead getting it from other countries, that slows down the economy, which is of course not good. Now, in recent weeks, President Biden has approved a new $8 billion drilling project in Alaska. That's called the Willow Project, but it is because inflation and interest rates have been so bad that he has seen that he has no choice in order to instead to open up this new drilling project. So inflation has caused a lot of these issues because if you look at what happened with the Silicon Valley Bank, they, that is the bank, bought government bonds when interest rates were lower. But then their depositors were engaging with the bank at times when interest rates were high. And so a bank has to pay a depositor an interest rate. That's why we all put our money in the banks, because the bank pays us in order to put our money there. And when the economy was slowing down and interest rates were really high, Silicon Valley Bank, in order to compete with other banks, had to offer their depositors high interest rates. And so they were lending at low interest rates, but they were paying their depositors at high interest rates, and this created this uneven interest rate spread, which led to their collapse. So that's number one. What really is going on here is this inflation problem. Number two, and this is a little more understandable and less economicsy, has just been plain and simple poor management at these three banks. That is Silicon Valley Bank, First Republic Bank, and Signature Bank. ESG, or environmental social governance, aka wokeism, has plagued these banks in their business dealings. Let me give you some examples. Barney Frank, who is a U.S. representative, a Democrat from Massachusetts, was on the board of directors of Signature Bank, which is a sure sign of eventual trouble because he is a big wokester, big ESG guy, and the Signature Bank started to really focus on climate change investments, on socially responsible, combating systemic racism investments, and not fulfilling their fiduciary responsibility, which is to invest their depositors' money in places that will make their depositors money. Silicon Valley Bank, I'll give another example, had a sustainable finance group that monitored progress for things like operational climate group initiatives. It sought the, quote, implementation of operational greenhouse gas reduction initiatives. What does that mean? It's such gobbledygook. Like, the implementation of operational greenhouse gas reduction initiatives. It's just such a vague BS, but that's what the Silicon Valley Bank was doing. Also, the Silicon Valley Bank only had one member of its 12 members of the board with any experience at all in the banking sector. Isn't that unbelievable? Just one of 12. The other 11, by the way, many of them were Obama donors or Hillary Clinton donors. One of them actually was so depressed when President Trump won in 2016 that she went to a Shinto shrine and tried to pray away her woes. There's also an improv actor on the board of the Silicon Valley Bank. It just shows you where these individuals' priorities are. The Silicon Valley Bank bragged about the fact that 45% of its board were either minorities or women, but only one of them actually had any banking expertise, which is really what matters. First Republic Bank also was heavy into DEI and ESG. It crowed about the fact that it was the first bank to refuse making any further loans to the fossil fuel industry. So the point is, these three banks did not focus on, banking, that is looking at repayment versus default prospects of applicants for loans, also the risk versus rate of return for bank investments on their balance sheets. It requires technical expertise to run a bank, and instead they're focusing on all this ESG crapola. So what this has done, these bank collapses, they have made the rich richer, actually. The burden of these collapses are actually not on the wealthy depositors who held their assets on these banks, but everyday American taxpayers. So the Federal Deposit Insurance Corporation, which is the government group that helps sort of keep banking stable, it insures each depositor, each American depositor in a bank, up to $250,000 of their money deposited. This is in order to prevent a banking hysteria crisis. So people know if they put their money in a bank, some level of their money will be guaranteed, even if that bank goes bankrupt. But what happened here, with each of these three banks, Silicon Valley Bank, First Republic Bank, and Signature Bank, is that all of the depositors, even the ones over the $250,000 FDIC threshold, they all got their money back. And in fact, most of these depositors at these three banks were well over the $250,000 threshold. These three banks had depositors that were the uber rich, uber elite. I'll give you an example. Silicon Valley Bank, 90% of the depositors at that bank were over the $250,000 threshold. So the FDIC guaranteed $18 billion in uninsured deposits at the Silicon Valley Bank, 13 billion of which just went to 10 accounts. That gives you the sense of just how filthy rich these individuals were. And with each of these bank collapses, the Biden administration and the FDIC has said that they are going to insure all depositors. So the rich didn't lose a penny. But what has happened is that in order to make up for the fact that the FDIC has spent billions of dollars bailing out these wealthy depositors, what the Biden administration is saying is that banks will have to pay higher fees in order to belong to the FDIC. Now, President Biden says that this is not a taxpayer bailout because, again, banks are having to pay the higher fees to belong to the FDIC. But maybe that's technically true, but it is functionally a lie. Because how are the banks going to get that money to pay to the FDIC? They are going to dip into their depositors' funds. Depositors are people like you and me, everyday American taxpayers. So it actually is a taxpayer bailout. That's one way that this has made the rich richer. Another way is that these collapses of these what are called middle range banks, i.e. ones that are not in the big four. JP Morgan Chase is one of the big four, B of A, Wells, TD Bank. These smaller banks like Silicon Valley Bank, First Republic, Signature, when they fail, it actually benefits the big guys, the big four that I just mentioned. If you look at what happened with the Silicon Valley Bank, the First Republic Bank, the most attractive assets of the First Republic Bank, that is the most well-performing loans, were purchased last week by JP Morgan Chase. So JP Morgan Chase got to come in, pick whatever assets they thought were performing well from this failed small bank, turn away the assets that they didn't want to take in. So JP Morgan Chase gets more depositors, gets richer, gets more influence, where the smaller bank fails. And so this is actually the opposite of what is supposed to happen. In our financial system, we have heard government officials on both sides of the aisle, we have heard the American elite talk about how they want to provide more choice to the American people with their banks, because it's just the same thing like in everyday life. When you have more choices of bananas, it impels people to grow better bananas and sell them at lower costs. It's the same thing with banks. When you have more choices, then people may be able to offer you better interest rates. They may have better investors. It's just always better to have more choice. So the collapse of these smaller banks are benefiting the bigger banks who can just sweep up the remains and become larger. This allows these bigger banks to sort of operate in hand in glove with the government in a way that we saw with social media. Imagine if there were many social media companies instead of just a few. We wouldn't have seen the Twitter files catastrophe of the collusion with government and Twitter happening, because the government wouldn't be so easily able to influence Twitter if there were more options for social media for the American people to go to. That is, again, the same with banks. So that's in broad strokes the facts, what happened. 3 out of the 4 largest banks collapses happened in the past 6 weeks. It's because of reckless monetary policy, inflation, also poor management, ESG, and all this has done is put the burden on the everyday American taxpayer and benefited the rich, who didn't lose a penny in this whole process, and benefited the 4 large banks who get to sweep up the remains. That's sort of on the surface what's happening. Now let's go under the surface. And this is where sort of the timeless principles that I talk about ad nauseum come in. What's really going on is that our culture is seeping in and leaching itself into every institution in the United States. We think that wokeism, or sort of shabby ways of thinking and behaving, are confined or segregated from other aspects of life. But these bank collapses show that that is not true. One of the primary cultural phenomena that we are seeing is an excess of denialism. We live in a culture where you can just call reality a different thing and convince yourself that there is a different reality. But as we are seeing with the collapse of our economic system, no matter how much you try, no matter how much you label and try to call things something different from what they actually are, reality is always reality. Look at the transgender issue. Again, you may be thinking, what the heck does this transgender issue have to do with the collapse of the banks? I'll tell you. We live in this society now where you can just say, I am a woman, and automatically you are called a woman. Of course, I have a lot of empathy and, sympathy, probably is a better word, for transgender individuals, especially those who are truly gender dysphoric and who are not just sort of infected by the social contagion of this transgender issue. But still, no matter how much you say it, a woman or a man cannot just automatically become a woman. That is just a distortion of reality. But again, we put a label on something and something just transforms. I'll give you another example. Look how often people say that things are racist. I was recently reading someone writing on Reddit that the color of Band-Aids are racist because they're more in line with white people's skin tone than black people's skin tone. You can just call something racist, and even if it's not racist, that's your truth, that's your reality, it automatically becomes racist. We're just seeing this denialism everywhere. Look at President Biden lies on almost a daily basis. In his most recent State of the Union back in February, he said, we're in a better position against China than we've ever been in our history. China's kicking our ass. China is creating the fentanyl, selling it to the Mexican drug cartels. It's being funneled across our border, killing Americans at record high rates. China is spying on 120 million American citizens through TikTok. China is asserting itself on the world stage, trying to broker the peace deal between Ukraine and Russia, bringing our adversaries in the Middle East closer together. But President Biden is going out and saying that we're in the best position to combat China ever in our history. Again, this distortion of reality. You can just say something isn't so, and it isn't so. But the problem is, when it comes to bank and everyday money, that's not true. Banks collapse. So we see President Biden is saying that our economy is great. You can't just wave a magic wand and make all of these things go away. Reality hits, our banks are collapsing, our economy is not great. President Biden is saying that the FDIC thing was not a taxpayer bailout. I explained to you, of course, it's a taxpayer bailout. If the banks are paying higher fees to belong to the FDIC, they are getting that money from taxpayers. President Biden is saying that the ESG policies pursued by certain banks are great in changing the world. They're not great. They're not changing the world. They're ruining the American economic system. But again, this should not be surprising to us, because we live in this society where we can just call something different, and we think reality can be transformed, and it's catching up to us with the collapses of our banks. That's the first thing that has informed this crisis. The second sort of and final broader societal cultural problem that has created this crisis is that we no longer have any boundaries in American life. Look at ESG, what I read to you about the Silicon Valley Bank, Signature Bank, First Republic Bank, having these climate change groups and pursuing these responsible investing. The job of a bank is to protect its shareholders, to invest its customers' money well. A bank should not be getting into the realm of social justice. But again, we see this blurring of distinctions, these blurring of boundaries everywhere. In schools, on my show Julie Noted, where I was talking about the news, I was reading that a Colorado teachers union, which has 39,000 education workers in that union, recently passed a resolution that it will teach children that capitalism somehow harms young people and LGBTQ people and people of color. I mean, the whole thing is ridiculous. Schools are supposed to teach you math and reading and science. They're not supposed to be infusing woke diktats into the curriculum. Everywhere you go to I was at my supermarket the other day. There's a pride flag in the vegetable aisle. I'm here to buy peppers. Why am I seeing a pride flag in the aisle? And so when you look at here, what's going on with the collapse of the bank, no wonder, because schools are no longer just supposed to teach about education, grocery stores are no longer just selling you foods, and banks are no longer just investing money. There are these blurring of boundaries. So when we go back to our everyday lives and people are talking about woke things, and they say, as often many of my friends say to me, what does it matter? What does it matter calling people by, crazy pronouns? If they want to be called a cat, why does it matter calling them a cat? Why does it matter having a pride flag in the vegetable aisle at your grocery store? It does matter. Every chipping away of the truth and of boundaries, it sort of culminates and it bleeds into every area of life. And as I've said many times throughout this episode, especially in the economic sector, reality always hits, as we've seen with the 3 out of 4 biggest bank collapse happening in the past 6 weeks. And sadly, we may not be seeing the end of it now. Thank you very much for joining me today. I hope that this was educational for you. Please follow me on Instagram and Twitter at Julie R. Hartman. You can also email me with any questions, any comments, anything at all at julie@hartman.com. And remember that each of our thoughts, choices, and actions shape who we are. So let's think clearly, choose wisely, and act with principle and determination. See you soon. Take care.